On to the Midcap Masala show. Let's get started with the first management onto the show, and let's talk about Quess Corp. What's the way forward by the company? What are the key growth triggers that the management is looking forward to? Let me have a word with them, and let me welcome Mr. Lohit Bhatia, who is the CEO of Quess Corp, joining us onto the show. A very good morning, Mr. Bhatia, and thank you so much for your time. And firstly, let's talk about your earnings then, because quarter three performance was largely in line to what the market was also estimating for you. But just wanted to understand from you, how was the quarter for you? What were the key highlights, and how would you categorize the overall demand environment during the quarter gone by?
Sure. Thank you and good morning. Glad to be on your show and to be able to speak with your viewers through you. This has been a good quarter for us. It exactly panned out as we were planning to make this happen. Quess, as you know, is India's largest workforce management and staffing company. We are the fourth largest in the world as far as volume is concerned. We ended this quarter at 483,000 workforce that we deploy. The revenue came in at 3,930 crores. That's up 3%. EBITDA, if you see, is up 4% for the quarter and 28% for the year. Came in at 80 crores, which is the highest ever for the organization as well. The EBITDA margin also expanded to go past the 2% mark, 2.03% as we speak. PAT came in at 29% above last year as well, and 19% above last quarter. Adjusted PAT was 62, giving us an EPS of 4.1 during this quarter. If you also see, the balance sheet has 325 crores of net cash. The board has announced 5 rupee interim dividend for the financial year based on not just our numbers, but also our financial metric and the EBITDA to OCF conversion, which came in at 92%. If you see, across the board, the volume and value is the play that Quess has been doing. And two of our businesses, one, the professional staffing business, expanded 42% EBITDA margin over last year and closed in at a very healthy 12.5% EBITDA margin run rate today. And our international business, which expanded 26% year on year, ended the quarter with 7% EBITDA margin. So overall, if you really look at it, I would say this is a very, very healthy quarter for us. And it sets us up for a strong ending for this financial year and planning for the next year and 4 years thereafter.
All right, great to know about it. But along with that, help us understand that like 52% of the personal staffing segment headcount is actually coming from GCCs. Do you think that we are entering a multi-year GCC hiring super cycle? What are your thoughts on that?
That's a very good question. 72% of our headcount and 7% of our revenue within the professional staffing space comes from GCC. See, this is something which we started building way back 5 years ago in 2020, 2021. As we were coming out of COVID, we wanted to have an organization in technology and professional services, which works not just with IT services, but beyond IT services also works with enterprise clients in technology and GCCs. Glad to report that, like you said, 72% of the headcount and 67% of the revenue today comes from GCCs. With this, we work with about 190 odd clients. India, as you know, has a 1900 GCC presence in the country, and every year between 60 to 100 new GCCs are coming. I must also inform your viewers that 2/3 of all the GCCs in the country till date have come from North American continent. Now, if you look at the rest of the world, which is Middle East, Europe, Generation 1 companies, and Far East, including Japan, that's something which we feel in the next 5 years will come as far as GCCs in India is concerned. And the way Quess is poised with its origin strategy, one service provider for a multitudinal services, including talent and technology, infrastructure, people, and the allied services, we definitely feel that, yes, this will be a multi-year cycle for us as well.
To know about it. But Mr. Bhatia, you guys also come out with a Pulse report, and your report shows actually that the sub 1 year roles now account for over half of the workforce tenure. Now, is this cyclical trend? Is that something that you are getting to see, or it's sort of a structural shift in India's labor market?
So, as you know, Quess is at the stepping stone of formality in India. As the youth of India completes their education and wants to come into formal workforce for the very first time, it is Quess which brings them and connects them to almost 3,000 enterprise customers in technology as well as non-technology within the country. The second important aspect is that there is a shift in the country from informal labor market to formal labor market. And everything the government's been doing in the last couple of years is obviously to enhance the formality in the industry and the market as well. The third is that there is a shift from rural economy to urban and semi-urban economy as well. All of these are tailwinds for an organization like Quess Corp. And what we also notice is anywhere between 40 to 50% of the youth that comes and joins us every year has come into formal work for the very first time. That means we are aiding and helping them register them for EPFO for the very first time and getting a UAN number for them. See, this is exactly the kind of stepping stone that Quest has been wanting to become for ourselves in the last 18 years. And we're very glad to play this role for the economy, for our customers, and for the youth of India. Uh, if if you really look at it, even today, with about 83% informal workforce in the country, and everything which has happened in the last year or so, we feel that this formality would definitely enhance and increase further in times to come.
All right, great to know about it, and your insights were indeed helpful. But with this, Mr. Bhatia, we let you go. So good having you on the channel today. Thank you so much for your time.
Thank you very much.
All right, so that was the management of Quess Corp talking to us about the earnings gone by as well as the outlook and what's really happening within the labor market. He shared his insights, but with this, it's time now to slip into a very short break. Don't go anywhere. We'll be right back.